I'm Greg Hunter. Welcome to USAWatchdog.com. The second guest of the year is David Morgan of silver-investor.com. David Morgan, of course, is an expert in silver and an expert in many other markets, too. David Morgan, thank you for joining us today on USA Watchdog.
Well, thank you, Greg. It's nice to be with you, and thanks for being the second guest on your awesome website. And I know, checking the numbers, you've really grown rapidly. So obviously doing a lot of things right. So congratulations.
Well, I'm smiling because it's it's been a lot of Sundays and a lot of hard work. Anyway, but I want to turn the conversation back to you and some of the stuff in our we were talking about earlier in the pre-interview, and we're talking about precious metals. They seem depressed. But then again, we've had, record amount of silver eagles being sold at the U.S. Mint. I think it's crossed 44 million ounces in 2014. Somebody is stocking up on silver, and meanwhile, we're having, the price of oil plunge into the 40s. What's going on? What's your overall view of what is going on? Is this the storm that a lot of people have been predicting, whether they're inflationists or deflationists?
Well, it certainly could be, and I'm going to answer your question, but I want to give a little bit of foundation, and that is one of the lecture series I did early on, and I was sort of famous in the early days, meaning going back about a decade or more, and what I did on a lot of my speeches is I'd bring these small DVD clips of movies, primarily, that depicted, the old adage, a picture's worth 1,000 words. Well, a 2-minute or 3-minute DVD clip is worth thousands of words. And one of those is a docudrama produced out of the BBC that was about an oil derivatives blowing up. And what it did was really, in my view, cement to people's consciousness that oil is the most important commodity, and that without oil or energy, nothing happens. If you go to sort of the New Age bent, and I'm not a New Ager, but, we're energy, everything is energy. Energy is the most important thing. And I agree with the idea that without energy, nothing happens. And so that's crucial. And the price of energy, of course, is crucial because it affects everything. Shipping, growing food is energy-based, transportation energy-based, on and on. So I don't want to belabor the point, but I want to give the picture of how profoundly important it is. Now, if we drill down to your question, is this the event that takes out the inflation deflation arguments and starts a downward spiral similar to 2008 or perhaps even more? I think the next step in looking at that would be to quote Jim Rickards. Like him or not, I think he's a very good intellect, and I think he's a straight shooter in most aspects. And one is how much debt is involved in the derivatives market surrounding oil, and in particular, what's called the tail end of the curve, or the marginal producers, which is primarily fracking. And these people, as a whole, are in dire straits, and that means that the amount of debt that is carried by the fracking industry at large is about double to what the subprime market was in the real estate fiasco of 2008. So let me summarize that, Greg, and you can ask me everything you want. We're looking at an explosion potentially that's greater than the subprime market of 2008 because, one, oil or energy is the most important sector out there, and two, the derivatives exposure is at least double what it was in 2008. If you want to add a third, the banking sector is really more fragile because instead of having, several entities that could go down to too big to fails have been consolidated. So we have even less ability to weather the storm.
I think, back in the day, in the run-up of the subprime crisis, and I was working at, mainstream media, I was working at CNN, and everybody was, one of the things you heard was, it's going to be contained. Subprime's going to be contained. Well, that was a total farce. My sources back then were saying it's going to affect everything in the real estate market, not just subprime. Could the same thing be said for derivatives in general? I mean, now the Bank of International Settlements is pegging it at a quadrillion, 1,000 trillion. I mean, not more than a couple of years ago it was 630, 700 trillion, and now they admit to a quadrillion. Some people say it's more than twice that. But let's just use the official number. 1,000 trillion. A 2% move. That's $20 trillion. I mean, that's a huge deal. So my question is, could the oil derivatives take down other derivatives in a daisy chain event?
Absolutely. There's no question about it. The main problem is, one, the over leverage of the system as a whole. And as Buffett has said, the weapons of financial mass destruction, which is a true statement. And secondly, if you look at how they're interconnected, a lot of times some of these oil derivatives and derivatives in general are tied not only to, will an interest rate go up or down, or something very simple that anyone could understand. They're tied to something like a spread trade. For example, will the euro deflate against the U.S. dollar at such and such a rate versus the T-bill rates degradation versus the short spread on the 10-year note? And that's just a simple example. I mean, they get more and more exotic. So a lot of them could tie not only a financial instrument to a financial instrument, that could tie a financial instrument to an oil derivative. And that whole thing could be used as an A entity against a B. I'm not trying to drill down too far. Okay, what I'm trying to do is give a flavor to how complex these mathematical equations are, and no one really looks at the risk in them. I mean, the amount of risk that they mathematically compute, that is the quote-unquote risk in a certain derivative or swap, is ridiculous relative to what the potential repercussions are. And we learned that already through long-term capital management.
And it can affect the entire derivative complex, interest rate derivatives, oil derivatives, commodity derivatives, everything.
Absolutely, because it's all tied together. All these banks, and that, going back to that DVD clip that I referenced earlier, it showed that all the banks are interconnected, and that a failure of one could take a bank that's very solvent on, at 12 noon on a given day, but yet they're tied into somebody else that they don't even realize, and they're going down, and all of a sudden they get a call, hey, pony up X billions of dollars, or 0.5 trillion, or whatever the number is, and all of a sudden they're in trouble. And it's because of several things, but simply stated, it's because of the over leverage in the system and the systemic failure problem, which means all these banks are tied together.
Silver is declining, or has been declining. I think it's found its bottom. I don't know. I don't want to call it bottom. But, here we have massive demand. Record demand at the U.S. Mint. And last year, I think, was a record year. This year beat last year's record for sales of Silver Eagles. What do you make of that? Record demand for Silver Eagles, and it's pretty much a suppressed price.
Well, what I make of it is something that is contrary to what you hear in the mainstream press. And that is, that the small guy, the little investor, is really stupid and they don't know what they're doing. Really, facts bear out the opposite. The little guy's got some pretty good common sense, and they understand that silver is on sale, that it's a good long-term investment, that the best way to own it is physically, no margin, in your own hands. And, of course, there are larger players involved, as we talked about a moment ago. But overall, it's like one of the surest things you can own long-term. The reason being is that, one, it's got a monetary aspect that can't be ignored, and it's got an 85% correlation to gold. And secondly, it's the best technology stock you can own. When our book comes out, the Silver Manifesto, we go into that in pretty good detail, and it'll be out, this month.
Because you need silver for all this technology.
Right, because it's used for everything electronic or electrical. Everything you think about in today's high-tech world with a touchscreen, be it a microwave oven, an iPhone, an iPad, or whatever, it uses silver at some small level. In fact, I just did a quick article about it on what the per capita usage of silver is. That means, use per person. And the amount in North America is about 0.3 of an ounce per year. And this isn't a silver investor. This is just someone that has a computer, has an iPhone, has electrical power coming into their home, has a refrigerator, that type of thing. They're using quite a bit of silver on an individual case-by-case basis, just because they are plugged into the grid and they have electronic goodies. Well, China has come up about tenfold from a decade ago, but they're still about 1/10 the usage of what the North Americans are. But think of what the potential is for a great deal of the population on the planet to use silver without even, being a silver investor, even thinking about it, only because they want to be more, technologically advanced with these gadgets that so many of us rely on a daily basis.
So what happens if we get this implosion? We were talking, some people are saying oil's going to go to 30, 20, in the 20s or in the 30s. What happens if we get a derivative implosion that sets another financial meltdown a la 2008? So let's say we have another financial meltdown. What happens to the price of silver? What happens to the price of gold? What happens to the price of fuel? What happens if we have a meltdown? Take us into your little scenario world here. What happens if we do get a derivative meltdown like many people are predicting?
Yeah, let me answer that again. I hate to editorialize everything you say, but I'm a pretty deep thinker, and I like to build a foundation. I like people to really know something solid that they can research themselves and verify, and then move on from there. So how it's going to affect gold and silver. But I did a little quick research here. We're not oil and gas guys, but I do pay a great deal of attention to the sector, as I said earlier. And this is something that I printed out, so I'm going to read it. It's from an excerpt from Art Bergman. He's an energy analyst, and he's written on peakoil.com. And here's what he says. Continental Resources is the biggest player in the back end. And you don't understand any of what I'm saying, just Google it, because Google's so good these days. You can, Google things and get a quick education without, having to call me up. So their free cash flow from operating activities minus capital expenditures was negative $1.1 billion in the third quarter of 2014. That means that they spent more than $1 billion more money than they made. Their debt is 120% of equity. That means that if they sold everything that they own, they couldn't pay off all of their debt. And that, Greg, that was at $93 oil. Okay? So, one more, just to give you the flavor. Now, let me interject here that all markets move at the margin. It's the marginal people that are just barely making it that make up the amount that's required. In other words, if there's a high demand for fuel, then you're going to put on marginal wells, which is what tar sands and the Bakken is all about. And if there isn't that demand, then they're the barely making it at high prices than the first ones to go. One more, Chesapeake Energy Corporation. Their free cash flow, that's the cash from operating activities minus their capital expenditure, was negative $750 million in the third quarter of 2014. Chesapeake sold $1.1 billion in stock in the third quarter of 2014, and their total liabilities are $23 billion compared to their market cap of $11 billion. Basically, Chesapeake Energy Corporation's liabilities are double their market capitalization. So these are just two examples of the kind of problem we're in. Now, you say, well, if this oil sector really starts to unravel, how will that affect the metals? Gold, I'm pretty sure, would either maintain where it's at, which is the worst case scenario, or go up and go up rather rapidly. Let me back up just a step.
Well, hold on. Let me ask you some questions. Will they start printing money? Let's say this thing starts really imploding.
Yeah.
And Chesapeake Energy says, we really got to stay in business, Mr. Federal Government. You need to bail us out. And the banks who have these derivatives say, hey, they've already got a bailout plan or a spending bill. And who knows, they start buying futures on the S&P, and they start funneling money to banks and oil companies and people who are on the margins insolvent. They sound insolvent to me. So what happens then if they start bailing people out and handing out tons of money or tons of we'll back you bonds. We won't give you the money, we'll back you bonds. That's what they did in 2008. What happens to commodities? What happens to gold and silver? I can't even call it a commodity. It's going to be collateral. What happens?
Well, they'll go up. They may go down temporarily, like we saw in 2008, but they'll catch a bottom and come up. Gold, particularly, silver, in a deflationary environment, in the past hasn't done that well, but There are instances where it did, but overall it didn't do that well in a deflationary environment. This time, I think, one, because there's a strong correlation of gold at 85%, and secondly, because it's such a technology-oriented metal at this point in time and a safe haven, and there'll be people that would be scrambling to obtain whatever they could that was secure. So the argument, deflation, inflation, is a valid argument. The problem with my view of it is that gold and silver are a crisis hedge. I don't know what's happening. It's a vast unknown out there. I'm scared. I need something I can trust. You know what? You can trust money that's been money for 4 or 5,000 years. That's something you can trust. And yet what's perceived to be the most trustworthy investment, being debt of the United States, which is impossible to pay off, it's similar to what I read you about one of those oil companies, is purported to be solid, sound, safest, and all those acronyms we hear about how good it is. But yet, as Rob Kirby said on your previous show, they can rub our noses in it, and they can take the interest rates down and the bond prices go up and say, see, looky here, how wonderful this bond market is, but they can't do it forever. There's an expression, I'm not going to get it right, but the gist of it is that you can't escape the truth. The truth wins out in the end. And we're getting to that point, that inflection point. So I think gold would go up. I think there'd be a run to gold. I think silver would follow and probably go up more rapidly once people caught on to the fact that there's uncertainty. There's a very unbelievable lack of trust in the system, and they need something they can trust. And if they need something they can trust, that's physical gold and silver. It's been that way for thousands of years, and people aren't that stupid. They understand that. Even people that are on the fence right now or aren't sure or waiting for the market to break to the upside or whatever their reason to not buy now, all of a sudden if they get scared enough, they'll buy. Believe me, they'll find a way to purchase.
But didn't record sales of silver already tell you that people are running into silver? I mean, record sales at the U.S. Mint, 44 million ounces. I mean, that's staggering.
Absolutely. And, all we really need, by view, for silver to really do better on a price level basis is for one of the bigger silver proponents like an Eric Sprott, Stephen Spicer, Zurich Continental Bank, one of these larger silver holding companies to come up and say, you know what, buy more silver. And just, test the market, buy 20 million ounces, 30 million ounces, and see what the availability is. I think it'd give a great deal of confidence to, the silver stackers out there, the silver community at large. If one of these larger entities came in, there hasn't been a big purchase of silver in quite some time, and especially at these levels, which are begging to be bought, because if you're a hedge fund, you could buy silver less than a producer can produce it, and have a fairly decent timeline, like 2 to 5 years. I mean, you're pretty much betting on almost a sure thing. So I'm actually a little surprised we haven't seen anybody step to the fore yet in the silver world and do that. Of course, the banking system, has excluded the silver market, you can make a case from the crime of 1873, they dismissed silver as a, monetary asset. You could make different arguments. I won't go into that and get off track. But, if you're really a smart, small bank and you want to, you love gold, I mean, what you ought to do right now is buy absolutely as much silver as you possibly can at this ratio, wait for the ratio to favor gold, and then trade that silver back into gold. I made that comment in Vancouver many, many years ago. A few guys came up after my lecture and said, you didn't quite understand it. I said, well, if you were really a gold bug, buy silver now at the ratio at 80 to 1. And when the ratio turns to 40 to 1, exchange that silver into gold, and you have twice as much gold as you could have purchased today. Aha, they got the aha moment. And I don't know if any of them did it. There were a couple that sounded extremely interested. But, if you're smart, small hedge fund even, money manager, whatever, and I'm not saying put everything you've got in the silver market, for crying out loud. I've been in it way too long, and I understand how volatile it is. But as far as understanding value and how to, perform accurately in markets when they're begging to be bought and no one cares about them, other than the small guy out there buying 44 million ounces of silver eagles.
I think some big players are buying that too.
Yeah, I think so too. And so, enough said on that topic. I probably beat that horse to death.
Are we at a low? Is this the bottom this time? Do you think you're going to stick your neck out here?
It's, I want to be right. I don't want to mislead people. I mean, I get enough flack, and I understand it. It comes with the territory, and I get that. And I've never made a statement that I regretted that I can think of. I mean, I've tried to be a straight shooter all the way through. And what is silver going to be at the end of the year? I mean, these are large banks that like to play the guessing game, and I go along with it because I want to get the exposure. But to really understand where we're going in this market, that's why I produced the Morgan Report, because I get a much better feel for my subscribers when I'm looking at data on a more or less daily basis. I mean, I made the statement a couple of years ago that silver would get over 26 by the end of the year. That was 2 years ago. And I made it on a show like yours, Greg. And then one of my viewers, a doctor, really follows this market carefully, said, David, you still think that? And for all the members, I made a separate video that I post for our Basic Plus subscribers and said, no. And here's why. And I showed them the chart, I showed them the volume, I showed them what was going on. I said, absolutely not, it won't. Well, no one in the public domain heard that. Everybody in the public domain said, oh, David's wrong. He said silver's going to be 26 by the end of the year. Well, I did. And that was the last time I was asked that question in the public domain. Before the people that we do our best thinking and best work for in a more up-to-date manner, more timely manner, if you will, they all knew that it wasn't going to happen and why. So, I'm sorry for the long-winded statement, but these markets are extremely volatile.
So you're not going to make a prediction?
Anybody, well, I'll give you a prediction. It's going to be higher, okay? I'll say it.
Oh, okay. All right. So you think it's the bottom's in here at 16,
I
whatever.
really think the bottom.
What's mining cost? I mean, with $16 mining cost, I've heard everything from
well,
20
if you go
to
HP or RTZ, they don't even factor silver into their equation. So for these huge, multi-billion, 600 billion market cap companies, they don't give a hoot about silver, and yet they produce really so much of it relative to the silver producers, which are only 25% of the market. But their all-in cost, taxes included, are around $22 to $24 an ounce.
Oh, boy. How long can that go on for?
Well, it's just like the Bakken question. One thing I wanted to say I forgot about the Bakken.
Yeah.
This stuff always unravels in a more longer time frame than you might expect. I want to make that very clear to your viewers. I know you get a lot of views. And, David said, I'm not implying this is going to unravel tomorrow. I really think it's going to take probably 4 or 5 months from now, Greg. So I think, May, June, start to look for the repercussions of this sub-$50 oil. It's just the way markets work. It's as you said, the banks will come in. Congress has already put the taxpayer on the hook for these derivatives. I mean, they've already set in place ahead of time, somebody else is going to be responsible. Certainly not the people that wrote the derivatives. What a concept. So we're in a situation where you've just got to understand that the consciousness that got us into this problem is so far removed from reality that the way to come out of it is some other convoluted, bizarre, obfuscated situation that's going to be unintelligible to most average, hardworking people that say, what is going on? And they won't understand it because it's going to put under a mainstream media with sound bites that are going to twist it and spin it and make it sound like everything's okay when the reality is things are continuing to decline.
Great point there, but I wanted to bring up another point, being as you've talked about that, things continue to decline. I mean, there's a analyst out saying that fourth quarter GDP is going to look more like 2%. They upgraded the third quarter to 5%, and they counted Obamacare spending. Also, there's noise of Greece, leaving the euro and saying, hey, we don't want all this debt. We're going to rearrange it. We're going to basically default on it. We can't pay all this back with this austerity. Other countries are going to, Portugal, Spain, Ireland, they're going to say, hey, we want the same deal. And Germany is already weak from these crazy sanctions. They have 6,000 companies doing business in Russia. France, cut off the sale of these mistrial warships to Russia. France's banks are very shaky, to say the least, and they are imploding. Could that be part of the perfect storm that implodes the system, maybe faster than before June?
Oh, could. I mean, as you know, Greg, we've done a few interviews, and most that I do, I always have to kind of gulp and repeat myself that everything I've said on a timeline is assuming or presuming that there isn't a black swan event out there. And there's so many possibilities for a black swan event that certainly, day after tomorrow, we could see the markets close. We could see a cap put on the gold and silver markets. It's already in place. The CME put out the end of last year. They're allowed to move a lot more in price than ever before, but they're still capped. And a lot could happen. So certainly that could. I mean, again, to really understand, I did an interview and I was really, probably had too much coffee or something, but I said it's unbelievable to understand what's really going on or something like that for the title. You can Google it. But basically, when you understand how precarious we are in this system on this upside down pyramid, and we're at this little bitty tip, and a slightest wind can pretty much blow it over. And many people that study this market get it. But there's a lot of people that are just too busy. They're too busy trying to get a job, or they're too busy working 2 jobs to make ends meet and that type of thing. They can feel it, like the movie The Matrix, feel that something's wrong, but you don't know exactly what it is. I think that prevails throughout the global economy, that a lot of people on a global basis, and some put it up to a certain element like, food shortage or a water crisis or an energy problem. And all those things coalesce really into one problem, and that is we're not telling the truth. We're not telling the people what's really going on. And you got this spin machine at the top telling everybody things are just fine. Don't look behind the curtain. Don't look behind the curtain. Everything's great. And that can only go on for so long. And I think we're getting closer. I think 2015, I was wrong. I said it would be a transition year, I think, last year. Or it was transitioning. It's hard to say, precisely, when World War I starts. You could say, yes, the Archduke Ferdinand was assassinated. That was a start. And go backwards and say that was probably it. But in real time, it's pretty hard to say. But say, things are good, they're not collapsing. It's like, are you kidding me? How many people are on food stamps getting, some assistance on their food? How many people are unemployed? How many people are employed at jobs that pay less than they once were? Are you kidding? Of course we're collapsing, but it's not what people perceive, meaning that, there's no economic activity. Under the worst of circumstances, there's always economic activity.
Well, if you would have said 6 months ago, hey, when oil was around $100, that, hey, it's going to get cut in half. Actually, you're going to see, you said 6 months ago, hey, you're going to see oil in the 40s, which we have. People would have laughed you out of the room. Maybe that was the black swan that nobody saw. Maybe I kept saying that we're going to have some kind of dislocation. I thought it was going to be in the gold and silver market. It wasn't. But I said, we're going to get something. We're not going to leave 2014. It's going to roll into 15. I think it. And I did not know that the oil would be the black swan, but certainly the big crash in oil prices and the speed at which it crashed. Do you think that could have been the black swan that's taken us into 2015?
Well, it certainly merits extreme thought, because it could be. I don't want to say it probably is. I don't want to be right, but certainly, as I said earlier, and it's the most important thing to get out of this interview, is everything depends on energy. And because we're in a situation where this energy market has imploded, Google what a low oil price means for a global economy. Google that, start reading. It'll take you a couple hours just to read like the first 10 articles. Do that, and you'll come out with a very good sense of what this really means. A lot of people think, oh, it's great, I can fill up my car for less. Yes, that's true. But that's kind of a small portion of what it means, because what it really means is all these financial instruments, these derivatives that are tied to it, are underwater because of the low oil price. And once those banks that are all tied together start to fail, there's really no way to come back. They'll try. They'll do what you outlined, Greg. They'll put it on the taxpayer. They'll have an emergency meeting of Congress. They'll try to float new bonds or put the debt payments off, 6 months, or put a moratorium. I mean, they'll try all kinds of things. But as I said earlier, the truth will out. At some point, the idea comes that, you know what, we've been lying to ourselves for way too long. We have got a real problem here. And it, in my view, will get away from the authorities. No matter how much the spin doctors, the political animals, the power elites, or the mainstream media try to portray it, the reality is going to shine through, and the emperor has no clothes, and people are going to say, "Oh my God, now what do I do?" And what will they do? They'll run to gold. They'll run to silver. That's what they'll do.
Complicated situation, and you got to know more about about the economy than just gold and silver, which is why in Portland, Oregon, you're having your checkerboard, what you're calling a checkerboard conference, and you're talking about money, power, and consensus. Just briefly, how do I go to that? How does somebody go to that? What's the cost? When is it? It's, at the end of January, is that right?
Yes, it's actually Spokane, Washington.
Spokane.
And it is on the 24th of January, which is a Saturday. It's going to be three main people, Marshall Thurber, Daryl Schoen, and myself. I suggest everyone Google Marshall Thurber. Marshall is quite a profound thinker, and he is actually I just don't mentor, it's too strong a word. He has been responsible for some of the best thinking of Tony Robbins and Robert Kiyosaki. And so everybody pretty much listening to your show, Craig, would know those two names. He's a very good thinker. So he's responsible for developing the checkerboard game, which is a consciousness expanding game that is important to understand the monetary dynamics in the global economy.
All the moving parts is what you're going to talk about.
All the moving parts.
Not just gold and silver.
And so that's about half the day. But you're going to get it on kind of interior basis. You're gonna know it to the depth of your bones. Excuse the corny analogy, but it's true. And when you learn something that deeply, you can't forget it, which gives you the ability. So, if you look at what Robert Kiyosaki and Tony Robbins got out of learning something from Marshall Thurber, I mean, because of that, let's look for the next Tony Robbins or Robert Kiyosaki to come out of this event in Spokane on the 24th of January. I really believe that much, that there could be somebody, which means we need to, as Chris Duane is often says about consciousness, it's you cannot get out of the problem with the same consciousness that you thought up the problem. And I agree with that. So we've got to think outside the box. We need some leaders. We need people that are willing to take action. And that's pretty much what this event's all about. We're going to talk about gold and silver, yes. Derivatives, yes. We're going to answer questions. We're going to give you your values worth here in Spokane, Washington. But nonetheless, it's not for everybody. It's really for those that are, let's say, more the leadership-oriented type of people than people that just want to look at these kind of websites for entertainment.
Okay, well, I'll put a link on after the interview if people want to sign up. We have a shot at looking at it and taking a look at the program and what it does, and we'll also link to your fine website, silver-investor.com. David Morgan, thank you so much for joining us today on USAWatchdog.com.
My pleasure, Greg. Thank you.